Hi there, traders. We have a cherry bomb trade for you today, this May 12th, 2021. We're looking at an ETF that tracks the emerging markets. And what excites me about this trade is its liquidity and open interest. What doesn't excite me about this trade is the bid-ask spread, despite that liquidity, and the return on capital from this kind of trade. So we're going to look at two alternatives to today. Well, one alternative, two trades today. So if you like that idea, come on in. Let's take a look. Hi everybody, my name is Neil. This is Option Theory, and thank you so much for joining us today. Stick around to the end if you're new here. We'll tell you how you can join us and make this an interactive learning flight simulator for you. Okay, on screen here you can see the charts for EEM. That's the ticker. So if you're in Thinkorswim like I am, go ahead and type EEM into your ticker box up here, and you can see the chart for that. Definitely a lot of sideways movement, but sporadic. I didn't go over my trade overview. Hang on a second. 4 drops of liquidity. I did say that. The IV rank of 34 puts us apparently, according to Tasty Trade today, in some short premium territory. Okay, I know that we like to shoot for higher IV rank, but sometimes we take what we can get. Let's go back to where we were. All right. And look at that. I'm typing in. You can see what keys I hit to change my scenes there. All right, let's go back to EEM. And now, with that said, we're going to take a look at selling a put that's at this 50 strike here. And we've been, even though this is a green candle, you could say we are moving downward here. And will we continue down to 50? It's possible. Will we blow through 50? It's totally possible. However, this is a high probability trade in either of the options we're going to look at today. So we're looking at a 79% probability profit on the cherry bomb as it stands right now that was sent to us in our email today. Now, this could come on down here, and now look at this level of 50 is old resistance. And there's some that say that old resistance can become new support. So maybe that will help us breathe a little or sleep at night, whichever one, but I have a better recipe for sleeping at night. All right, let's go ahead and go to the Analyze tab, go to Add Simulated Trade. We're going to be in the June monthlies, which is June 18th, with 37 days to expiration as of today, May 12th. We're going to be on the put side. We're looking at the 20 delta put, which is the $50 strike. Now, bid-ask spread, like I said, it's 18 cents wide. That's pretty wide if you ask me, especially for something with this much open interest and 4 drops of liquidity, right? Well, if you click on the bid to sell this put, you can see that it doesn't give us a mid price. The mid price would be 46 cents, but I'm going to leave this unlocked right now at a market order. And then I'm going to go ahead and go to the risk profile so we can check our probabilities for this trade as the cherry bomb trade. Let's set the date in the top right corner to the date we see in turquoise in the bottom left corner, which is June 19th. There we are. I want to stretch, or I should say move my expected move close to my left edge, and then stretch this out so I can see my expected move near the right edge. Now I want to get this gold price slice where this turquoise line crosses the x-axis, where that red line is. And I want to do that automatically. Going to set my slices to break even at expiration. According to this one, we're looking at a 79% probability of profit, or nearly 80, right? That's good numbers. That matches what we see with Tastyworks. I have Tastyworks open in another monitor over here. I'm spoiled. I've got 2 monitors. If you haven't lived with 2 monitors, I'll tell you, once you go, you can't go back. All right. Anyway, with that said, we're looking, oh, look at that. It jumps to 81%. Not sure why that jumped, but there it is. High probability trade on this one. However, what's not exciting about that, and if we go over here, calc, and we type in 37 cents over, let's call it $5,000 of written. Hello. $37 is what you could the maximum you could make, and divide that by the maximum amount of risk. We're looking at a 0.7% possible return on capital if you take a maximum profit on this one. Not the best as far as what people think is sexy, right? But you got a high probability of taking this money and running. Okay? So, with that said, let's take a look at the alternative. Go back to Add Simulated Trade. I want to hold down the Control key, and I'm going to click on the ask for the 45 put. Now we're looking at, instead of a, what was it, 37 cents? We're looking at a 33 cent. Let me just compare that to the price that I say I'm getting at over here in Tastyworks. 34, so it's a penny more on Tastyworks, but sure, let's leave it at 33 cents. Now, with that, now what we're dealing with, a defined risk trade. We're looking at, instead of risking 5,000, we're risking only 500. Okay, now that might help you sleep at night. That's my recipe for sleeping better at night. Okay, defining your risk. Not only that, it does drastically improve your return on capital, right? Potential, at least. So instead of making 0.7%, I'm sure you will be able to enjoy this one, 33 over 500. It's really not that, but there you go, 6.6%. Let's call it 7%, right? That's better return on capital that you can get with this vertical. How much does it affect your probabilities, though? Let's take a look. We were at a 79% probability of profit. And let's see what this changes to. 79% probability of profit. So same probabilities, basically, and defined risk. Which do you prefer? I'd love to know, if you're going to put this strategy on in your portfolio, which would you prefer? The naked put or the short put vertical? Or, of course, neither, or something else. Either way, I'd love to hear from you guys in the comments. I know some people watch these videos. I'd love to hear from you. All right, so we've got the probabilities set there. I'm going to go ahead and put in this vertical here. I'm going to set this one, confirm and send, max profit of $33, max loss of 467. While I don't like the risk to reward ratio on this one as far as amount, definitely not 1/3 the width of the strikes by any means, but I'm really just trying to simulate that bullish position that has similar probabilities, and I'm going to go for it. Go ahead and hit send, put that in my working orders, and there you have it. All right. Thank you so much. If you made it to this far into my video, here's a thumbs up for you. I don't have a thumbs up button, but you do. If you feel I have earned a thumbs up for what I've provided you today, would you please hit that button for me? I appreciate it. If you're new to this channel, stick around for just a moment. I'll tell you how you can join us. It's real simple. What you want to do is head on down to the description, and you can sign up for Tasty Trade's Cherry Bomb email list. It'll take you over to Tasty Trade's website. It's a bit.ly link, yes, but that's only so I know if it's getting clicked. There's no affiliate relationship here. This is just me sending you over and getting some emails. You'll get, if you sign up for the Cherry Bomb email list, you'll get 5 emails a week. There's a 5. Mondays are motivational emails from Tom Sosnoff himself, and then trade ideas from Tom Preston, Tuesday through Friday, if those are trading days. And we put those on here using Thinkorswim's simulated trading called Paper Money, which I like to call the flight simulator. So if you're at that phase in your trading where you want to do this, you want to learn to do this, and even if you're already trading, you just are trading and you want to train, all right, trying different trade ideas, this is the place to do it. You can get all the learning without risking your real hard-earned dollars. So I hope this was beneficial for you. When you're done signing up for that Cherry Bomb email list, come on back to this channel and subscribe and ring that bell so you'll be notified when our trade videos are released. All right, everybody, thank you so much. Until I see you in tomorrow's Cherry Bomb, may the market be with you.